Hello, this is Dave, and welcome to Equity Story. Just have a quick look, first of all, I think, at the ASX 200. And as you can see, we're just sort of hugging that sort of trend line on a daily chart. I do think by the end of the week, we're more likely to be sort of slightly down than up. But, as long as we're holding that trend line, at least that is something. And hopefully the trending stock should gain some traction and start at least doing something positive. And another chart I think is quite interesting to have a look at the moment actually is the S&P 500, not the daily, because you can see obviously it's struggling to get above those trend lines. Looks very similar to obviously the ASX 200, but on the weekly, and I was listening to and reading some interesting articles coming out of the States, and they're really looking at this level, this 2,134 as a pivot point. And they could be right. Rather than using moving averages, they really think we need to use previous highs, just because the market has just been in this extraordinary tight range for a while. And what they're saying, if they think on a weekly chart, if it breaks at 2,134, it could have at least a 5 or good 10% pullback. That I don't know. It's not really our trending model, but certainly it's one. We've got the levels. It's certainly one we'll be keeping an eye out on, and it'll be certainly something obviously we'll be watching pretty closely. What I'd like to talk about tonight is firstly just sort of two interesting articles, and one of them I posted from the infamous Mr. Roger Montgomery himself. I posted it on Einstein's training blog because I think it's a really worth a good read, and he's obviously explaining about debt levels to GDP and how much in debt we are as a country, and obviously the huge property bubble we're in at the moment. I think it's well worth a good read, and certainly I'm really glad here at Equity Story, all our 3-year growth stories are not sort of, I'm not saying if we had a big property crash, the whole market won't be affected, but certainly I'm glad that we're not in stocks I think that are directly would be affected by a huge property collapse. Nearly most of our sort of 3-year growth stories are very much aligned to the Asian growth story, and certainly different sectors of our economy. But it's certainly well worth a read, and I think if you are in certain property stocks or stocks which are reliant on construction in Australia, I think you should be really cautious. The other article I'd like to talk about today is one. It's actually an interview on CNBC by Mark Farber, and what I might do is play it to you first. I mean, Mark Farber is your real sort of doom, gloom, and boom guy. He's been sort of pretty gloomy for a while now. He reckons he's been saying for the last 8 years the Dow is going to crash. I'm sure one day he's going to get it right, but don't discount this guy, because in that time he's actually, and historically, he's got a lot of things right. What I think was really interesting is he's really bullish at the moment about resources. So I thought I'd play the interview, and then we're going to have a chat about it afterwards. So here's Mark. He starts the interview obviously talking about how he thinks again that the US market is highly priced. But hold on a second, he goes on to say later on in the interview that he's seeing an opportunity in the resources sector.
The US market is highly priced, with few exceptions, like the energy sector is depressed, resource stocks are depressed, mining companies are depressed. So we have to focus on individual securities, individual sectors.
Here's the thing, though. I mean, as earnings continues playing out in the U.S., people are looking at energy to retake leadership in the U.S. market. You don't think that's going to happen with what we've seen, the slight rebound in commodity prices?
Well, I think that commodity prices will strengthen for essentially two reasons. Okay. If you look at Asia, you also travel around, the need for infrastructure in Asia is huge.
Absolutely.
They have to build roads. You go to Jakarta or Manila, the infrastructure is a catastrophe. They have to build infrastructure, and also for tourism, airports and rails. You cannot ship that many people by airplanes. There's no space in airports.
Which means demand for steel.
You have to,
concrete.
yes, etc. Number two, in the Western world, they believe that, I'm not saying it's the right belief, but they basically, the belief among economists and the neo-Keynesian and the interventionists is that monetary policy alone cannot lift the global economy out of its slow growth mode.
So there, I think it's quite interesting. You know, my father giving two sort of really strong reasons, and you know, I think we've been a little bit guilty equity story just looking at these the resource recovery, just China alone. I think that's a mistake. I mean, you've got to look on the whole of Asia, and you know, we do hold this monopoly in iron ore, and no one can actually. We make great money out of iron ore. No one can sort of produce it cheaper than what we can. So potentially, if they need a lot of steel, especially all around Southeast Asia, I think it might be a good time to have a look at BHP and Rio. And you know, if you look at BHP, it's had this sort of really pretty horrible last few years. It's, you know, it's come back from as high as this sort of $35 level, and it's come back and, you know, went as low as 15. For me now, it's starting to look interesting. You know, it's starting to look exciting. It's starting to have a good move up. I think this certainly could be a really interesting sector to go long on with a trend, to go long resources, and certainly, you know, I still think why these elections are on at the moment. You know, I certainly just, you know, I'm trying to basically trade a little bit at the moment that I think Clinton will win. However, you know, yesterday we had another report that came out and said Trump's winning by 2 points. That was the IBD tracking poll, historically the most accurate poll in the American elections. So, you know, that just throws the cat amongst the pigeons. This election's still, I think, really alive. So, you know, maybe we just wait till these elections are finished so we can see where the markets are going to go. But certainly BHP, I think, could be a really interesting sort of company to go long on at the moment. As Rio, I think Rio, the chart looks even better, and certainly, you know, I think you know, if you look at Fortescue is a trend we missed, and I think this is a little bit our fault. You know, I think being a little bit not maybe looking a little bit too much at the fundamentals of Fortescue, being a little bit wary of obviously their debt levels, but this trend has been an absolutely stunning trend nearly all year, and you know what? Right now it looks better than ever. It's got a fantastic buy signal on a bullish trend. You know, it had that sort of buy signal back in June. You know, this looks like it's even going higher. However, I think if I was going to play the game, most probably at the moment, you know, trending wise, would definitely much better having a look at Rio BHP. What we have decided today in the meeting this morning with the analysts, we are adding a resource company to our 3-year growth portfolio, and this is going to be more of a mid-tier company where we feel obviously we're going to get a stronger movement than we will in Rio and BHP. But certainly Rio and BHP are certainly looking like potentially they could be really exciting trends. Good to see the gold price up at the moment. I'm just looking at the gold price in the States. I think that will bode well for Northern Star and Evolution. I don't think it's going to be long before those are trending up and doing really, really well for us. ORE is coming back. I think, you know, we're only trending because we have been so wary of the market. We're only trending really some of the creme de la creme of the ASX 200. So we do expect them to bounce back fairly soon, and hopefully it won't be long before we are taking some profits of those stocks. We're still being cautious at the moment. Equity story, obviously, I think it would be good to get these elections out of the way. But you know what? You know, the other side to the coin, I mean, in the meeting today, we're looking at exciting companies, right? Ones we absolutely love, that we think if the market falls, we just want to get into them. I mean, you know, Hansen Group, you know, one of the best, most exciting companies on the market, you know, coming back close to those trend lines. It looks absolutely great. ALU, Altium, one of the great chip manufacturers, looks like it's got a bit more down, but again, what a great company. Bellamy's, you know, got today, Bell Potter's put out a price target of about over $16. Unfortunately, Bega Cheese and Blackmores came out and said their formulas were not doing that well in China. That didn't really surprise me. I mean, Bellamy's have a natural formula. It's a different model completely, as do A2 Milk. The Blackmores formula is a very standard formula, and when me and my wife, we do have a little one, we looked at it, we thought, we didn't really think it was going to take any sort of market share away from other companies that sell similar products. So Bellamy's is a different product. It's a natural baby formula. It's one we use for our little boy, and also so and so's A2 Milk. Very different, I think, stories, and I don't think you'll see their growth numbers coming out of China nearly as bad as what Blackmores have said today. Anyway, that's all I've got to talk about tonight on Equity Story. I'd like to thank you for listening to us, and I look forward to bringing you the report tomorrow night. Thank you. Good night.